The initial reaction was down 4 or 5%, and some of the sarcastic ones out there on social media were noting that the stock turned around. What do you think people saw later that they may have missed on the initial headlines?
Yeah, thanks for having me, Brian. So I would say in general, people were looking for a little bit more upside on the second quarter revenue, and that really dragged the stock down in the aftermarket to start. I think what really changed the game per se was the guidance for the third quarter, especially around the enterprise business going into next quarter and Azure in particular. To see Azure up sequentially in the third quarter, it was really, it's really remarkable at its size and scale. So that's really the change that happened during the course of the conversation with the management team. The outlook sort of gave people confidence that a lot of the things we're seeing in the macro environment right now aren't translating into softer demand from Microsoft's clients. And that's why the stock's up this morning.
We've talked a lot this year about how valuations and multiples have been compressed because as rates rise, multiples tend to come down. You know, people even have formulas for every whatever quarter point. You got to bring it down by 5% or whatever the number may be. Microsoft's forward PE, as I look at it, I know a lot of people have different estimates, Kirk, has come down about 5 points. Are you happy? Are you comfortable with the forward valuation of Microsoft right now?
We are. Obviously, Microsoft's big enough that the overall market comes down. Microsoft's going to feel some pain from that. But when you think about Microsoft's premium versus the broader market, you are paying a premium for a good reason, which is Microsoft's very durable growth that they have that's based on recurring revenue sources. About 70% of their business comes from the enterprise, which gives them great visibility. You're talking about a fortress-like balance sheet, a company that can generate roughly $70 billion in free cash flow a year, and really a company that's riding a lot of very strong secular trends that we're in the early days of. The digitization of the economy, the shift to the cloud, the importance of data for every company. You know, these are secular trends that are going to persist well beyond whatever decision the Fed makes over the next few months. And really, you know, this is why you're paying a premium for Microsoft. There's a good reason for the premium, and we think that holds as we, you know, hopefully come out of this downturn in the next month or two.
Well, speaking of premiums, Kirk, quickly, this nearly $70 billion buyout of Activision Blizzard. What does Microsoft want to be?
Well, I think Activision gives Microsoft a whole nother narrative in the consumer space, which has been, you could say, lacking over the last 4 or 5 years. A lot of the growth of Microsoft's really come from the strength on the commercial side. Activision gives them a lot. It gives them a big presence in mobile. It gives them, obviously, a much bigger first-party catalog that they can leverage across Game Pass, along cloud streaming over time, and really a position in the metaverse, you know, whenever that comes to pass, if 3-5 years. You know, Microsoft has a very unique set of assets already when it comes to the metaverse, whether it's their cloud infrastructure, whether it's their competencies around security, collaboration, and Activision really just adds a content element and bulks up what they already have. So I think it's going to be a very important part of the narrative whenever it closes at some point, probably next year.